Hey everyone, it's Daniel from Infovest here. Just wanted to do a quick video on interest rates, and I wanted to talk about July's meeting. So the U.S. Federal Reserve, is planning to raise rates between either 50 basis points or 75 basis points for the month of July. And now the thing is, before the CPI report, which happened this month, we had markets pricing in 50 basis point in June, but instead was changed to 75 basis points within the matter of a couple of days after the report. And now we're having markets pricing in a potential chance of a 75, either a 50 or 75 basis point rate hike in the month of July. Now, again, previously it was what was priced in was a 50 basis point rate hike in July, but now we're getting people saying that, a higher chance of a 75 basis point rate hike. And when the Fed came out and during the FOMC meeting, Jerome Powell came out and said, it could either be 50 or 75 depending on the data. So he kind of left it open there. Now, I want to comment on that, and I want to talk about, this coming weekend, long weekend that the U.S. and also Canada has. So it's the 1st of July, which is a holiday in Canada, and also 4th of July, which is a holiday in the U.S. And now, with these two main holidays, right, you can expect definitely for a lot of people to go out and probably buy a lot of food, especially if they're going to do barbecue and whatnot, and especially if they're going to attend a lot of people at their house or at their cottage or whatnot. So you can expect high probability of a lot of people going out to the grocery stores and spending a lot of money, especially spending more than they usual than what they usually do, right? So with that in mind, I think a lot of people are going to start realizing how pricey and expensive food is, right? Food, I mean, already people know that. I'm not saying they don't, right? But it's going to come to a lot of a kind of a bigger realization or a bigger hit for many people that food prices are very expensive, and that yes, gas prices they are also elevated, and going to the groceries back and making more trips than usual, or driving down to the cottage and whatnot and spending money on gas and realizing at that point that, oh my gosh, that prices are high. And then you're going to get the same situation, which I talked about in the last video, that people are going to just still spend, but just blame it that, oh, this is inflation, this is higher prices, this is what, I have to deal with, so I do got to fill gas anyway, so here it is. And that kind of mentality and that kind of effect, especially during a time where you kind of have a holiday season, and a very big holiday season like 4th of July or 1st of July in Canada, that kind of mentality, you can expect that that's going to continue to increase and keep inflation elevated, especially with food prices. Now, when you look at the CPI and you look at the calculation, a big component of CPI is, yes, housing and rent, but also food. And food in the CPI report, last report, was also quite elevated, and have seen an increase in that component over the couple of months. So my take is, for the month of July and the month coming forward, we're going to see CPI inflation continue to be elevated, continue to see prices move up, continue to see food prices continue to move up, and probably even supply constraints start to kick in, where you might see in the grocery stores in certain areas where you might see less food or less items on the shelf, which is also going to continue to put upward pressure and upward prices. And with that in mind, that's the reason why I think that a high chance, a good probability possibility of a 75 basis point rate hike for the month of July. I don't think they're going to do a 50 basis point. I think the Fed's going to do a very likely chance that Fed's going to do a 75 basis point rate hike. We're going to get more data to see, if that will come true. We have, as I speak right now, the data's not out, but University of Michigan numbers that are going to come out today, inflation, Michigan consumer inflation expectations that are going to come out today. That's going to be very important to watch out as Fed is watching that now. And then on top of that, next month we're going to get jobs data, inflation data, and we're going to see how inflation is playing out for the month of June. And so I think, my take is that I do believe that we are going to see higher prices and continue for prices to move up. And I do believe that the month of July, we are going to see a 75 basis point rate hike rather than a 50 basis point. Now, what about the idea of a 100 basis point rate hike? Now, a 100 basis point, are you going to see something where definitely, Fed did leave on the table, and he did mention yesterday in his meeting that, hey, I'm going to leave everything on the table. I'm not going to, exclude anything. I'm not going to say no hard nose to anything. So yes, 100 basis point or even more is possible if inflation doesn't taper, right? Their main goal and their main focus is to fight and tackle inflation. So, could they do a 100 basis point rate hike next month? I'm not sure. Let's see. Unless the data comes in very horrendous, unless inflation comes in really, really strong, that, you got to do a 100 basis point rate hike. It's still a possibility. And in my humble opinion, I think if you're going to do a 75, why not just do the full 100 basis point rate hike, get to the neutral zone and the high end of the neutral zone, and then maybe you can start slowing down rate hikes from there, or continue with your 75 or 50 basis point after that. But the market expectation is that 50 or 75 next month, and then September, another 50 basis point rate hike. And I think what's very likely is 75 basis point rate hike in July. And then you've got a 50 basis point, which is going to come in September, which basically takes us right into next month, the 2.5%, which is right in the neutral zone. And then after that, taking us to 3%, which could lead to, right? Remember, we're at 1.75% in the US in terms of interest rates, and we're already seeing some pain in the economy, right? We get to 2.5% next month, and then 3% in September. Definitely that's going to put a lot of downward pressure on the economy and on the markets, which could mean that by October or January next year, you could see a continuation, a massive panic sell-off, or the economy to really contract in that scenario. So let's see what happens. Again, it's all data dependent, like the Fed said, and it's all communication dependent, like I say, from what the Fed continues to say. And I think this week or next week, 4th of July and 1st of July, for Canada and US, I think they're going to continue to see higher prices and higher elevated inflation, which gives them a reason to go with the 75 basis point rate hike in July. Let me know what you guys think. Leave a comment below on this video. Hit the like button, subscribe if you would like to continue to learn more and follow more on what's happening with the macro news and in the markets. And I hope to see you guys in the next video. All right, cheers. Good luck, everyone. Bye.